Okay, we are live. Okay, welcome everybody to Wall Street Reporter's Company Spotlight. Today we have a debut, a very special debut with Empower Clinics. The stock symbol is CBDT on the CSE exchange and EPWCF over the counter. Steve McCauley is the CEO. Steve, welcome.
Thank you very much, Jack. Appreciate being on your show for the first time.
Steve, it's great to have you. Just so our goal with these programs is to bring our audience, stocks which have that 10x to 100x upside potential. We've had a number of big winners this year. A couple of stocks that have been 10x to 20x actually, and so this could be the opportunity for the audience to discover kind of the next 10 bagger and for them to learn a little bit more about the company. And you're going to be actually doing a presentation a couple of days in our Discovery Day live stream. So
yeah, we hope so.
Yeah, and today, basically, I just kind of want to, have the audience get to know you. I want to get to know you because we haven't really spoken at length, and learn what the story is about. So, with that said, Steve, what does Empower Clinics do, and what's the market that you're going after?
Sure. So we are an owner-operator of health and wellness clinics. All of our operating assets right now are in the U.S. We have a foundation in the state of Arizona, and we originally commenced operations in the Pacific Northwest, Oregon State, and Washington State. And we're chasing after really a massive market. If you think of healthcare in the United States and really in all developing countries around the world, it tends to be broken into primary care, kind of the traditional type of medicine and delivery of care, and what we call kind of alternative care. And the two actually work best when they're working together. But we're more focused on the alternative care market because it's just becoming such a massive, important part of healthcare and healthcare delivery. Now, the other thing that's very important for us is, we have traction already. We operate 7 physical clinics. We have a telemedicine platform that is live today. Our patients are using it every single day to get connections and consultations with our physicians. And we just recently closed a really nice acquisition for a diagnostics laboratory called Chi Medical Laboratory out of Dallas, Texas. And that transaction just closed last week. So it's just fresh news for us. And we're really doubling down on delivering that supply chain of healthcare and diagnostic tests. And we certainly need to talk about how we're a player in COVID-19 testing through our clinics and now with the lab.
Okay, so Steve, so the first, actually, I probably should ask you what do these clinics do? But I'll actually go backwards. I'll ask you you mentioned traction. What kind of numbers are you generating? Let's talk about.
Well, we're already generating $5 million annualized revenue, and that does not include the acquisition of the lab or the additional roll-up efforts that are going forward, because we're really very acquisitive. In that $5 million so far, year to date, at least for the first half, we generated positive cash from operations, which for a small cap or micro cap company is a little bit unusual. But
it is very unusual.
Yeah, we like to operate these clinics on a cash flow positive basis. It's really a mission critical aspect of what I want to see our operations do, and I think we can operate that way on a go forward basis.
Okay, so you have traction, you have some real numbers. So what do these clinics do? Like let's talk about alternative health. What exactly, which markets are you serving, like in the size of the opportunity?
Yeah, so the size of the opportunity is significant. I mean, globally, you're talking about in excess of $200 billion in developing nations. Developing nations are spent on care. In the U.S. alone, we're seeing in excess of $30 billion just on out-of-pocket expenses by Americans on alternative care. To answer your question about what kind of care and that's, I guess, spectrum for us, it really it's always physician-based consultations. And our definition of physician ranges from chiropractor to naturopath to acupuncturist to physiotherapists, delivering a whole range or variety of physician-based consultations, and ultimately care. And we really think that harnessing in on that market and figuring out how to more effectively provide care for patients in conjunction with primary care, not against primary care, but actually working with primary care in that whole healthcare supply chain is really what we see our very special piece of the puzzle.
Okay, so that's very interesting. So the focus really is on that kind of alternative side, because some companies are going after primary care or chronic care. You're doing alternative health. Let's talk about the telemedicine. You mentioned the telemedicine side. That's a very hot area now.
Yeah,
it's a
very important area.
The whole world of healthcare is really being transformed by telemedicine. What are you doing there?
We have a telemedicine platform that we use every day. And we've been using it for quite some time very effectively. And specifically with the COVID-19 pandemic, we've seen a real uptick in demand of our patients wanting to use our telemedicine services. We've also seen certain of our physicians who actually prefer delivery of their service through telemedicine. And in some cases, what we do is we'll have a physician in one room and we'll have the patient in another room in the same clinic. And because we're looking out for the health and safety of not only our patients but also our physicians as well. But generally speaking, our patients can register to come in clinic for a visitation, or they can register to do an online, video virtual consultation. And we're seeing the percentages or that mix start to move up, where we're seeing more and more percentage of telemedicine services being delivered than in clinic. So I think the healthcare model in North America and around the world, is forever changed. We're not going to be seeing, states pull back or federal positions pull back to eliminate or not permit telemedicine going forward. I think it's just a better delivery as an alternative of delivery of service, and I think patients deserve that choice. And we just want to be a group that provides that choice to our patients.
Okay, so it's interesting. You're kind of doing a roll up of these clinics. I assume that the multiples are kind of low in that space. I mean, a private, acupuncture, whatever, chiropractic. What do they sell for? Like, what are you paying for these things?
Yeah, so we're very good at understanding the clinic model from an acquisition standpoint. And yes, our stated goal is to absolutely roll up clinics. We want diversification to be a multi-state operator. We're looking at the Canadian market right now and acquisitions there because we want to diversify our revenue streams. We want to de-risk any concentration risk that we might have. To address your question about valuation, typically what we see is an alternative care clinic really is going for somewhere between 1 to 1.5 times revenue if it's cash flow positive. If it's only break even or maybe slightly below and there's a strategic reason to go after a particular acquisition, like maybe it has a large patient base, we would then knock that back. And you might go to less than 1 times, like 0.8 or 0.75. And that really is the market that we target in terms of valuation. So for us, it's very affordable. Obviously we leverage our capability with our cash stock to do these acquisitions. And it's a balance between managing our cash requirements and dilution, and always considering both as we try to negotiate a transaction.
So that in itself, I mean, it is pretty interesting. I don't think anybody has done a roll up in that kind of alternative healthcare space. I mean, I've seen things with different, like there was even stuff in what is it? Pet, the pet hospitals. That was a huge.
Yeah.
Yeah, there's different areas. I mean, there's. I think there's so that's a great arbitrage opportunity. Essentially, you're buying these things at let's call it 1x revenues. As a public company, as you build traction, you could be trading at let's call it 5x revenues. I mean, some of your peers in the space are trading at crazy multiples, and I think that's going to be there. Like you have what is it, One Health? I believe they're in the primary care kind of model. They're trading at I believe it's 10x. Then you have the telehealth space, which is off the charts, 20x. So so that's a pretty interesting situation. And you're trading right now, I think, at like 2x revenues.
Yeah, so you're right on. I mean, there's a thesis here that you're getting at, and the thesis is as we look at our comps out there, we definitely think there's an upside opportunity in our valuation. We're currently only trading at 2x revenue. So we believe that there's definitely room to go here. And if we have the ability to acquire clinic groups, and we prefer groups, not individual clinics, because we want to really make some quantum leaps in our growth. But if we can get stuff on the books at 1x revenue and get that arbitrage up to 5, 7, 10, 20 over time, that's great value for our shareholders.
Okay. What's interesting? I should at this point, I'm going to kind of jump ahead and I usually have an order of questions to get, but you come out of GE, right? So which is very interesting. And that is, in its heyday, I don't know when you were there, but in its heyday with Jack Welch, that was the kind of, the temple of financial engineering. They really understood, these types of arbitrage opportunities, buying at, 1x and as a public company. Tell us about your background.
Yeah, so I mean, I was very fortunate to have a great career time at GE, and I was there in the Jack Welch era, and was there as we transitioned to the Jeff Immelt era and beyond. It was a great learning ground for me, and I was a sort of hungry, young corporate guy that really wanted to move up the GE ladder. And the world of GE Capital for me was a great fit. It's a hard driving place to live and work, but if it suits your personality and your ambitions, then it's a great place to really learn and learn the craft and get educated. So I was fortunate to get progressive roles at GE Capital. Culminated, I was the CEO of United Kingdom for the GE Capital automotive businesses. And from there, actually went back to the US again, and was fortunate to get onto Roger Penske's staff at the public company again. And again, just kind of learn from an industry icon. And that just has led me to stay in the public company realm. It's an area that I like, that I know. It's not my first time being in the public company space. And as you know, whether it's a small cap company or large cap company, when you have a role like I do as chairman and CEO, you kind of wear two hats at all times. We have to operate and run the business and do that effectively, but we also have to understand capital markets, the need for raising capital and appealing to our shareholder base, and ultimately growing shareholder value over time.
It's funny. I'm glad you mentioned this. This is I think this is the first time I actually heard a CEO actually say that, because a lot of times in the small cap space, or in general with public companies, a lot of CEOs, especially like entrepreneurial, guys, they take a company public, they don't quite understand that their real job is to make the stock go up. Because, as a private company, you want to build a business, that's, you grow revenues. But once you're public, obviously, you have to build a business, you have to create, you have to produce a result. But at the end of the day, I think investors, and we have people in the live stream, and anybody's watching, please add your comments. At the end of the day, they want the stock to go up. They see that as your job. And very few CEOs actually understand that. I mean, creating value, look, that was GE, Jack Welch, that was his thing. He understood creating shareholder value. I mean, because look, I think most investors, they would they would be much happier to see your stock go from 5 cents to 25 cents rather than your revenues go from 5 million to 50 million and the stock stay the same, right? I mean, they want that stock to move. So it's I'm glad you understand the idea.
The dynamics of the market can be very tricky. It can be fickle. But we and my board, we talk about this all the time. We definitely need to operate, and we need to be effective at our operations and produce a solid, business model and business plan. But we need to take that execution, do it all over and over and over, and then share that news with the market to help drive awareness and to demonstrate that we are a group that is based on execution. And that, the retail investors, the investment banks, the brokers that are out there, can trust us to execute. So one of my themes with my own team is that, we're not big believers in just sort of putting news out for the sake of putting news out. We want it to have substance and have meaning. And, that's something it's my commitment to, your audience, that you'll continue to see regular, ongoing, high quality news coming out of our shop for sure.
Okay, so it's interesting. Okay, so I'll tell you, this roll-up opportunity, this consolidation opportunity, is great. I mean, the fact that you have this, this GE Capital background, the focus on execution, that's critical with these things. That, to be able to integrate the acquisitions, wring out the synergies, all that other good stuff. Who else? Tell us about some of the other members of the team at Empower that you have.
Yeah, so the team is really starting to develop. So we have about 100 people in kind of all the various facets of our business. So it's not incredibly large, but it's definitely developing. The board is made up of two gentlemen in Arizona. One is a gentleman named Dustin Klein, who was a co-founder of Sun Valley Clinics, which was an acquisition that I closed last year. It was in May. And that's now actually our primary clinic group with headquarters in Phoenix. And then we have an attorney by the name of Andreas Bonksha on my board. He is also based in Phoenix, Arizona. And we are in the process of identifying an additional board member right now. We're going to get through our AGM that's coming up this week, and then we're going to get on that path of filling an additional board seat as well.
Okay, great. We're going to open up to some audience questions. I don't know if we have we don't have too many people watching right now, which is very interesting. Always, whenever there's a company debut, the audience is small, then it builds. And then like 3 months later, I mean, I get like emails from people saying, "Oh, how come you didn't tell us about the stock? Now that it's, up 500%. I said, well, you get our emails. You see, you got to show up. I mean, everything is public information. Okay, so any audience questions, please put in your questions. Steve will answer them. What did I want to ask you? Okay, so you got this roll up happening. Now you mentioned the COVID testing, the clinics. Tell us about that.
Yeah, so as the pandemic showed up, in sort of early this year in the first quarter, one of the things that we looked at was, there's going to be an absolute need to have greater delivery of that service. What we were able to prove to ourselves is that we can add a value-added healthcare, physician-based, consultation or service onto our business model. We have the locations. We have the med tech staff. We have phlebotomists on staff. We have the whole technology layer. We can build the landing pages. We can campaign, and we can operationalize this particular service. And that's what we did. So we created a 4-phase rollout that started as a pilot in our clinics in Phoenix, Arizona, progressing towards a national program. One of the keys to our national program was actually getting the Kai Medical Laboratory acquisition completed, because Kai Medical Laboratory is a large COVID testing lab in Dallas, and it has the capacity to process 4,000 RT-PCR tests per day. And the PCR tests are really the gold standard. We all know them. It's the throat or nasal swab that we see taking place around the country and around the world. So we want to be a strong player to support the requirements of the pandemic at this point in time. We don't see the demand slowing down at all, going well into 2021, and who knows how long it's going to go. And Kai Medical has some very interesting product development capability related to the combination of COVID and influenza A, influenza B. So there'll be some more announcements coming out relatively soon about how that's progressing for Kai Medical, which is now a wholly owned subsidiary of Empower.
Okay. Yeah, it's interesting because this, I think at some point this COVID thing, I mean, it'll probably be around for the next year or so, but then, there's probably going to be more and more of these various, viruses, they keep popping up and they mutate. So this is going to be something that's definitely going to be out there. Let's go to some questions. Okay, so here we go. We got a tough question here. So Steve, well, not tough, but was there an was there a stop on the stock, OTC stop?
So we were delayed this past year in Canada for our year-end filings, and so there was an extension that was offered through securities commissions in Canada and the Canadian Security Exchange, and so that caused us to have a delay. Or we had a delay. We got our year-end filings completed in the summer, our Q1 and our Q2. So we are now switching over to, because we have those filings in place, we can now catch up on our SEC filings. We're a registered SEC filer, so we're going to have that cleared up in the not too distant future as we get those sort of the last little bits of that OTC reporting filed.
Okay, fantastic. Yeah, so we have full transparency. That's the great thing about our platform. We ask all the questions, and let people decide. I mean, we've had and I think that's one of the key things is that a lot of companies, a lot of CEOs, they really they can't handle scrutiny and questions. So when companies come on our platform, there's full transparency. So investors know that by the time they're on there, they wouldn't be on this platform unless they were able to answer questions, and they also had that upside potential. So that's a very compelling thing. Steve, what's your vision longer term? We're very obviously investors are short term focused. I want to know what you're doing. Next week, what kind of news you'll have on Thursday. What are your goals for the company 2-3 years out? What do you see as what will Empower Clinics look like, assuming everything goes right? What's the big picture?
Yeah, I mean, I think for us, for the board, we have a very stated objective is to build this business and this platform to make it ready to take a run at getting listed on NASDAQ. We think with our U.S. asset base, our focus on that large U.S. market, that we will be ideally suited for a big board like that. We're not quite ready yet, but as we work on our roll-up strategy, we build our revenue scale, we get to the share price that that we need to be at. That we definitely think that we will deserve to get that uplisting to NASDAQ. So that I kind of capsulize it like that. So all the work that we're doing in identifying targets, rolling up those targets, leveraging our technology base, really focusing in on what our strengths are, and really building on the traction that we already have. We're going to take a good run at it here. I don't know if it's 2021. I will see how rapidly we grow, and we obviously have to see what the markets are doing for us. But I think it's quite reasonable or possible, as we get into that 2022 timeframe, that we could be ready to get that uplisting.
Okay, but what about let's look from a revenue standpoint? I mean, is this $100 million business? Like, what could you be doing, assuming in terms of these roll-ups? Like, what's the upside here?
Yeah, I mean, it's I can't give guidance on what that future revenue is going to be right now, but I can tell you we know what our model is in these clinics. So we're looking at our clinics as we roll them in to be producing between, say, $600 to $1 million in revenue per location with cash flow positive. We have an eye to have 30, 40, 50 of these units on the books here over 18 to 24 months. The laboratory business also has great potential. These large labs, and this is a high complexity CLIA certified lab that can run all ranges of testing. So not just COVID, it can do blood and toxicology and a wide array. And we're particularly excited with Kai Medical about its new product development potential. So we see labs of this scale in the country produce anywhere between $5 and $20 million revenue very consistently. So we look at that type of roll up. We're going to look at other lab opportunities potentially as well as we look to really control this supply chain of alternative healthcare medicine delivery. So, I mean, conceivably, we could get to those, large, triple-digit numbers in time. If we do our job right, and the markets support us, then we've got a good chance of getting there.
Okay, so you just mentioned, so that you said, if I caught this right, that you'd like to see 40 plus clinics in the next 24 months.
Yeah, definitely. So we've got a kind of a target in our mind that we can get there. We certainly know that the market is very fragmented, very decentralized. It's ripe for acquisitions and roll-ups. It's one of the key again, when you look at the thesis of a roll-up, you're trying to play into a decentralized and fragmented market and start to consolidate and create a brand that is nationally recognized.
Okay, so let's say you have let's call it 40 clinics that are doing let's say $1 million a year. You have a couple of these labs which could be doing 5 million. Yeah, these are more substantial. So let's say you're doing 50 million revenues. So conceivably, conceivably the market might value you at let's just say 5x, 5 times the revenue based on the growth rate.
Okay.
So right, 5x. So that's 250 million revenue, 250 $million market cap. You're going to have obviously a lot more shares out because you're going to have to raise capital. So the market cap now is what? It's like is it? I don't know. It's 10 million.
10 million, less than 10 million.
10 million, right? So I mean, conceivably, with dilution, I can see a case for a 10x upside. Assuming everything goes to plan, this could definitely happen. I think, so to answer a question, Mitch came on late. Mitch was asking, how many clinics do you have right now?
Right. So we currently have 6 active clinics. We've got 5 in Arizona. We have 1 in Portland, Oregon, and we serve Oregon State and Washington State also with our telemedicine platform. And we serve, obviously the full state of Arizona with our telemedicine platform as well. And then we have our new lab location, which is in Dallas, Texas, where we have a full lab and we have an office down there as well.
Okay, so basically, you're sort of on that trajectory of 40 clinics in 2 years is not crazy. I mean, if you went from basically 0 to 7 technically in what is it, a year? And those
about 18 months. I took over the company January 4th of 2019. Okay. And we really started the kind of shift in what the brand would stand for, and the move, to create this roll-up strategy, and also shift the services. So we really understand kind of what we do each day, and go ahead and begin to execute on that.
Okay. Pete's asking, are you doing anything with cannabis?
So in our clinics in Arizona and also in Portland, we do offer medical cannabis certification service. In Arizona State is a medical cannabis state right now, although it appears through the current ballot that may convert to full recreational after this presidential cycle. So it is a service that we currently offer, but we're seeing diversification away from those types of services with more variety in other alternative care, naturopathic medicine, chiropractic, therapeutic type services, as opposed to say a medical cannabis service. Okay.
Let's see, any other questions there? Okay, so Steve, I'm going to go to the favorite questions we always ask here. In terms, okay, so in your opinion, what are the top 3 reasons why investors, should consider Empower Clinic stock today?
Well, I think what it comes down to is, we're working in a massive market. You can't deny the scale of these markets that we're chasing. Globally, this type of healthcare, or this part of healthcare, is in excess of $200 billion. The American market right now, Americans are spending more than $30 billion a year on out-of-pocket expenses for alternative care. And I think, the second important thing is that, we already have traction. Like this is working. We are well underway in the efforts and our execution strategy, and we have a very clear path, and we have a board that's very tight and behind the efforts and the strategy that we have in front of us. And I think most importantly, like, we're proving that our concepts are working. If we go back to what we talked about earlier, this idea of if I can acquire clinic groups, at 1x to 1.5x, and we can arbitrage them to, 10x revenue and shareholder value, and just keep repeating and repeating and repeating, we've got ourselves a pretty good concept that I think the market is going to really support and value in the future.
No, I like that. It's a very simple, clean concept to understand. Okay, last question. What kind of milestones do you have coming up? Like, what should investors be looking for? What kind of news flow can they expect over the next, let's call it 90 days?
Yeah, I think the key things coming up are going to be additional clinic groups that we announce and we get onto the books. And we really demonstrate sort of this quantum jump or quantum growth rate that we all know is there for us. I think the other thing that we're going to continue to talk about is hitting the milestones in our operations, particularly with what Kai Medical is going to be able to deliver and some of their new product development strategies. The volume that we're able to put through our business on our COVID-19 testing strategies over the next 6 to 12 months, whatever that may be, because it's such a margin driver and an important revenue driver. So I think these are the couple of key areas to watch out for over the next 90 days, as you referenced. And we look forward to coming back to your audience and sharing some of that execution and good news.
Okay, so there's going to be news flow. That's important. Our audience, they love news flow. Once the news flow stops, they go crazy. You got to have news at least every 2 weeks. Okay, with that said, Steve, we're going to have you back on, in a matter of days from now to have the full formal presentation for our Discovery Day live stream. So thank you, everybody in our audience, for joining us. And Steve, thank you. We'll see you soon.
Good. Thanks very much. I appreciate being on the show.